this market rather than sellers. All right, now we simply still put our trend line here and wait for the break of what the neckline, the neck. This is the neck of the pattern, the neck. So we want to see price break above it. Remember, no breakout, no trade, no retrace, no trade. Meaning, if it doesn't break out, you are not getting into a buy trade. No, no, no. And even if it breaks out, you need to wait for what? A what? A retrace of back this level. All right, and looking for buying opportunities to the upside. Okay, I believe I've been able to illustrate this pattern very well. All right, you now look for the buying opportunities to the upside from here after having your entries, your signal entries, which we're going to which we're going to in a later topic. All right, so I believe I've been able to explain this pattern and the psychology behind this pattern. So it's basically very simple. You're either buying or you're selling. So that's why we have the patterns respecting either buy or sell. All right. Now let's go to the inverted head and shoulder. It's pretty much the same thing. I guess by now you can be able to tell. A simple neckline taken out, a retrace to the downside. A retrace must happen after a breakout. A retrace, guys, write it down. Take your pen. I feel like you forget. This is my own pen, right? You can see my journal, right? We're going to go to how to use your journal, right? Every trade I've taken is inside this journal. Every trade, you can see red pen. The red pens are when I make L's. Every single trade I document every single thing in this journal. All right. A retrace, for every time there's a breakout. For every time there's a breakout, always wait for what? Always wait for what? A retrace. All right. I believe I've been able to lay emphasis on that area. So before we look for buying opportunities to the upside. All right. Now, what's the psychology behind a triple top and a triple bottom? Most scenario, most cases is what they call a consolidative form of market. Write it down. Write it down. Consolidative form of market. All right. A consolidative form of market. So price attempt breaking this area, failed to break it. Price attempt breaking this area, failed to break it. Failed to break it, push down, failed to break it, failed to break it, failed to break it, failed to break it. So in between these areas we have what? In between these areas we have what? Support and resistance in between these areas. So this is our support. This is our support. This is our support. This is our support. This is our resistance, indicating to you that there's a strong level up here and there's also a strong level below here. Price tried. So the market is moving sideways. Now, how do you get into such trend? I'll tell you for free. It's very, very simple. Wait for price to either break above or break below. What do I mean by that? Take a look at this. Price pushes up, break above this, and retrace and to the upside. So it could happen either ways, right? Now remember, in this type of pattern, there's no specific way as to where the market should go to. There is no specific way as to where the market could go to. Now, why am I saying so? The market could be heading from an upside like this, then turn out to give this consolidative move. Let's delete this so it doesn't disturb our charts. All right, because this is our chart now. All right, let's also delete this since we're done with it. Remember, that's a double bottom. Right, make sure you've written the note, all right, of all of those stuffs. Guys, make sure when you're taking the course video, always make notes. Always write down your notes because you forget a lot of stuff. All right. The market could be trending from an upside, comes and gives this consolidative move, indicating that the market wanted to rest before giving more potential buying opportunities. Now, the same scenario could still happen on an impulse leg to the upside, and the market tends out to do this, and it breaks, all right, and then retrace and back down. Yes, it could possibly happen. You see the setup, it can happen. The market was trending upward, then comes and consolidate and breaks below and start heading back down. It can happen. Alright? So what you want to do is you want to frame up everything and wait for a breakout on either on the support level or on the resistance level and a retrace. I know I'm emphasizing on a retrace. That's taking my money. Good. And a what? A retrace. So having that being said, same thing with this one, vice versa here. All you need to do is draw your support, your resistance, price could either go either ways. Alright. Now I'm going to be illustrating this on the chart. All these patterns, I'm going to be illustrating them on the chart so you can be able to see them. Alright. Let's delete all of these and head down to real life charts. Alright, let's just go to another pair. No need. So I'll take Euro USD and let's see if we can illustrate a pattern, a chart pattern. Alright. So let's go on the weekly time frame so you can be able to see very clear and open. Okay. Now, look at this back in time. Have you been able to spot a pattern in this pair? Now, let me just show you that what we've been saying is not trash. Now, let me show you what I mean by a pattern which I've been able to spot. Price pushed here, failed to break this level, came back, failed to break this level, came back. This is what, remember we spoke about this pattern. This is a double top or an M pattern, indicating to us that there's a strong level of what? Resistance above here. Can you see the resistance? Each time price tests this level, push back. Each time price this level. Now look at something. When price finally did break out from here, look at what happened. A retrace did occur. All right, we had a retrace somewhere around here, back to the upside, and look at this, melt to the downside. Look at, poof. So if we're swing trading, look at the peeps you've been able to catch. Have you seen that pattern? It's clear, right? You've been able to spot that pattern, right? Alright, we'll take another example. Let's delete that. We'll take another example. Let's look for another pattern. Let's go down on the daily so we can be able to see more patterns. Alright, I've seen another pattern. I don't know what's seen this pattern with me. So we had what? A clear W pattern somewhere around here. We had impulse leg, upside, back to the downside, and boom. Alright. So I don't know if you can be able to spot this pattern like the way I've seen it. So actually the pattern actually started from here. It's actually an open pattern. I want to adjust this head here. Good. Guys, can you see this pattern? Now where's the neckline of this pattern? This is the neckline of this pattern. Somewhere around here. Have you seen how price took out that pattern? Your eyes need to be very sharp in spotting these patterns. Alright? Don't expect it to be looking really juicy like the way they draw it with your hand. Like a W, you know the way they draw W, a very nice W. No. If you see something that resembles a W, that's a W pattern. It's a double bottom. Alright? Alright, this W pattern, a breakout, a retrace did occur. I bet you can see that. A clear breakout, a retrace, a clear breakout, a retrace did occur, and spike to the down to the upside. I believe you're getting this, all right? So that's the second example we've been able to see. What other thing? What other thing? Let's see if we can spot more pattern. We still have another W pattern somewhere around here, even though it's not really looking really good. So let's just leave that one. Let's see. Back in time. Back in time. Back in time. Uh, jeez. So guys, if I look very keen, this is an M pattern. Price pushed up, pushed down to the upside, and boom. All right, this is the M pattern. So not really somewhere around here, but somewhere above here. This is the M pattern. Now you ask me when is the breakout. This is what they call a fake out, which are becoming in a later topic. All right, price did break out, a retrace, and look at that smike to the downside. So these patterns are not really that looking really juicy. Let's take more clean and juicy patterns. Juicy. Let's see. All right. We also now have a juicy pattern somewhere around here. This is a massive double top pattern. A massive double top. So pairs like EU and GBP always like making double tops and double bottoms. Alright. So we had a breakout from here, a retrace, and price melt to the downside. So guys, have you seen now what I've been able to explain was not just male bullshit. It actually exists, it actually happens. Alright. So yeah guys, now let's go down to a next topic called, it's still part of this topic but it's kind of like a subtopic under it. It's called market structure, right? And I'm going to explain. All right, I'll need a white blank space to do this. All right, now market structure, let's use this white space here. It indicates that before the market reverses either to the upside, to the downside, it has a certain structure it has to produce. Now we're going to be drawing that structure. Let me start by drawing it, then I'll explain. So before, when the financial market as a whole has two types of markets. We have trending markets and consolidative markets. All right, trending markets. Make sure you're taking down notes. Trending markets and consolidative form of markets. All right. Now I'm going to be merging the topics I've been teaching inside this same topic. Now, let me level these parts so you can higher. Have higher. I'm just going to be cloning it now. Higher high. We have higher low. Higher high. We have higher low. I'll explain, alright? Just hold on a sec. Let me do everything. I'll explain. I'm gonna explain. 1 second. I'm going to explain what we mean by this. Higher low. All right, now what does this mean? You're looking at the diagram, nice, sweet, nice, drawn, and all that. What does this simply mean? Now, why price pushed to the upside? Price made what they call a higher high. All right, a higher high. Why is it called a higher high? It's because this high is higher than this high down here. And after making this higher high, it made what they call a higher low. Because this low, this low is lower than this low. I hope you're getting the psychology. All right. So we have this high is higher than this high. All right. Okay. We have again a higher high because this high is higher than this previous high somewhere around here. So I'm going to be using this backward slash pointer. This high is higher than this high. This high is higher than this high. All right. So this is called a higher high and this is called a higher low. Why is this called a higher low? Because this low is lower than this low. This low is lower than this low. Sorry, I was